Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, May 3rd, 2019. It's a little less than an hour into the trading day, and I wasn't planning on doing a video this early because there's really not, on the broad markets, not a lot to update, but there is quite a bit of chatter in the trading room, a lot of excitement. Remember, guys, check your emotions, and if nothing technically has happened to the charts. That's why I wanted to do the video right now. We're having a kickback rally. The market's been down. The Qs were down 3 days in a row, three red candles, and we're having a relatively, decent bounce, but it's a little less than 1%. But let's go over the charts. Doesn't mean it can't morph into more, but as of now, I just want to reiterate what I've said in the trading room. Nothing technically has changed. We came down here. We had first support around 187.76. We pretty much closed right on that level yesterday, or just a hair above it, and that needs to get taken out. So this is a bounce off support. It certainly would be ideal if we took it out today. But right now we're still well below the trend line, and so that's that. Unless we move up quite a bit more. We've already back tested it once. I'll say this: it's a very steep trend line, so I don't care for a back test. I'd really prefer not to see that. If we do, we're going to be stopped out, because the steeper the trend line, the higher levels it comes in at to get back tested. In other words, if we had a normal sloping trend line like this, or like this one back here, you back tested for a while, then you rolled over. This one, that may be the case. Maybe we go back test at a higher level, and that's again why we're keeping the stops relatively small on the trade. But that's it. So right now, yes, it's an up day, and it certainly has the potential to turn into more. There's several candles right here, and we're in that range. So let's just see how that's resolved. Try not to read too much into it. Here's the recent trading range with QQQ, and we're smack in the middle of it now. So anything can go, and we'll just have to wait and see what happens. Let's talk about a couple other levels and what's going on today. What stands out to me is XLK is actually one of the weakest sectors in the S&P 500. It is up, so we got to give it that. I'm not trying to spin it as negative, but we're seeing, snapback in energy. Of course, I mentioned there's those bullish divergences on the crude 60 minutes. We may get our little kickback rally there, but still a lot of technical damage was done on crude. And here's XLK. There's your breakdown, and basically almost a flat day. So this is something I'm monitoring. And as I said before, I'm most concerned with tech. I want to see tech break down. And right now, tech's underperforming the broad market. So just something to monitor. And again, the point I'm trying to make is nothing has changed in the long-term charts. And so, I find when you have a trading plan, if you get a sell signal or a buy signal, you position, you set your stops, you set your price targets. If you can use an OCO order, all the best. One cancels the other, and then let it run. So there it is. So nothing's changed in QQQ, nothing's changed in XLK. SPY broke down a while ago and still well below the trend line, well below the highs, well below the bearish engulfing candle from the other day. XLC is also weak, and that's odd because Amazon's up big. That's to me also, some chatter in the trading room about that, about thank you Warren Buffett and Berkshire. Keep in mind, not that it matters, but Warren Buffett didn't buy. He came out and said he didn't buy Amazon, and was one of his fund managers bought it for Berkshire. And what it shows is a couple things. Let's look at Amazon, and let's look at the FANGs where we're doing this video. I can tell you this: if that's the news that lifted Amazon 3%, and I'm surprised that XLC is not up more than it is, because that's the top. No, I'm sorry. Is Amazon? Let me see something. No, never mind. It was Alphabet. I was thinking about the top component of XLC. Amazon is up today, and what happened? Amazon had a close almost just a hair below the trend line yesterday. So going back to a few weeks, there's still some work to be done, because as I said, we want to see the majority of the FANGs break these trend lines, and I went through these the other day. So Amazon has yet to give us a clear, solid close below that trend line. Like I say, you want to see an very impulsive intraday break, big red candle, and ideally a daily close. So That one hasn't broken down yet, and the fact it's up 3% on the fact that Berkshire bought it tells me that's retail buying. Those are lemmings. Institutional, professional fund managers don't buy because another fund manager said they bought a stock. And keep in mind, by the time you hear about it, that's the PR coming out. They've long taken a position. They're in that position, and so they're just pumping their book. Again, whether you want to buy it or not, it's just I don't know if there's any other fundamental news for the lift, but that's it. We can sit there and talk about fundamentals all day long, but the charts are the charts. Let's modify that trend line a little bit. We can keep it like that. We can keep it like that. It doesn't matter. We still don't have a solid daily close there. So that's Amazon. Let me go through the components of the Qs while we're doing this video. We'll keep it quick. There's Apple still hanging in there. Right around this cluster of candles. Up 0.74% today. Microsoft still above trend. Amazon already showed you. Alphabet got knocked way down below the trend line, and Facebook's still above trend, hanging in there. So that's the work to be done. We have the breakdowns in QQQ and XLK that I wanted to see, and it would really help to see the fangs break. These are all those trend lines I covered a few weeks back. And of course, Cisco's already broken trend, Intel's broken trend. So a lot of these are the top 7 components of QQQ. So we have 3 down and 4 to go. And these two, Intel and Cisco, are lower. They don't have the weighting that the fangs do. So that's what we're watching. The other thing was, I wanted to look at the charts of the futures. So here's that NQ futures E-minis. There's a trend line off the 24th. So again, from a technical perspective, and it doesn't mean this can't morph into more, but it's a non-event in my book, because we have a breakdown. We zoom in tight. We broke down here. We back tested through Wednesday, then had an impulsive rejection off the back test, and we've been working our way down so far. 7,800-ish is resistance there. You can see minor resistance on NQ, and it's a little bit above it now, but not comfortable. You can see some reactions, little reactions from above, another reactions from above, or reaction right there. So that's the level I'm watching today. Bullish if we can punch through there, print a solid 60-minute candlestick close, especially a daily close below. Otherwise, we have a powerful sell signal here on the daily, fairly powerful, still waiting for those fangs, but we have a breakdown back test, so that's the level to watch right now. So at this point, let's see what happens today. We'll have to make a decision. I can tell you this right now. I will not modify. I don't see any reason to modify the official trade on QQQ. Like I said, let the charts, play out. If you enter trade, go back to your 60-minute chart. I'll just show you. There's that's the trend line again off the 24th lows. It comes in there. So we broke down, we back tested, we came in just a little below that 187.66 support here, bounced back above, and so to me this trade still looks fine. The 60-minute trend indicator down below, the 0 line right here, the PPO signal line, and again, so if they stop us out, we're talking about 1% from where we're at now. I don't know, that might be a total no more than a 2% loss on the trade, if that. And if we turn around or reverse here, then there's still a potential for another 6, almost 7% downside there. So we'll wait and see what happens today. Here's what ES looks like, the S&P 500 E-minis. Trend line off the lows on the 24th right here. Let me tighten that up a little bit. Yeah, it was broken down. Remember, as I said, the S&P 500, the broad market broke down earlier, but it didn't go anywhere because QQQ was still holding up. And as I said, you're not going to see the S&P 500 go very far if tech is still continuing to move higher, which it was until recently. So tech only just recently broke down. So then I have this minor trend line right here that yes, these are the S&P 500 E-mini futures, 60-minute chart. You can see that. So they're still below that level. Trying to find a level. I don't see here hard support level. You can see potential targets down here, but I'd have to fine tune these. Again, my focus right now remains on the tech stocks and QQQ and XLK and those market leading fangs. Okay, and a couple other things that I'm watching today. This video won't be all inclusive. but I do want to mention TLT is up, not up big, but like I said, I like it here. I like it on the back test, and I have liked it on the back test of the 122.50ish level. Uptrend line support as well. Yeah, we had that divergent high as I mentioned, and that still may play out, but I think we can get another thrust up here. That's what I'm leaning towards, and a move up to that T1 level, that first target there, before with maybe a an extension of these divergences. But the trend indicator, that PPO trend indicator, still above the zero line for now. And again, I wanted to point out that the stock market's up, so are treasuries, which are risk on asset, and so is gold. Gold's up nice. I posted this today, and here's that level again for weeks now, months even before when we were falling after this divergent high. This is a level, a scale-in area here down to about the 120 level. It's very nice support, and what I like about it is twice right here, that little red candle there on the 23rd of April, and then more recently yesterday we dipped down below that level, and those are potential stop clearing runs on longs, and also what we call bear traps. You can get some shorts to pile in, and a nice reversal today. So gold looks good, and even better, again, it was posted on the front page, so if you're watching the video you probably already saw that, but I want to show you real quick. Let's grab a gold here, 60-minute chart. Here we go. It's a little busy, but you can make it out here. You can see all the divergences. So a nice bullish divergence here on the 60-minute chart. These are gold futures, GC. So big divergent low. It's regained that. That's comparable to that level I was just showing you there on GLD a minute ago. So you can see the two little false breaks below and regain that level. Pretty impulsive move. And as I've mentioned recently, I actually like of the two, I like silver better, because silver is dipped a little. There's another bear trap potentially. Dipped down below that 1395 support. Strong move today. Look at SLV up 2%. Now it is at downtrend line resistance. So here's silver. Buy signal would come there. I do like the fact it's recovered that level right now, because again that sets the stage for potential false breakdown, aka bear trap. Positive divergences on the daily chart, which we do not have on GLD. And we even have nice bullish divergence on the 60-minute chart. There's the board I want to show you. There's your divergence lines. Silver coming up to the trend line now. Like I said, silver futures are up right now. I'm looking at another monitor, 2.28%. So roughly, the silver ETF does a good job of tracking. And of course, if gold and silver if the charts continue to firm up, GDX will follow. Right now, it's more about the metals today, but make no mistake about it, if gold and silver continue to rally, and as always, my main focus remains on the euro-US dollar pair, awaiting a breakout. This would be a more powerful or confirmation of a buy signal in gold and silver, breakout above this downtrend line, bullish falling wedge, and move up here to about that 115-ish level is what I'm looking at. And if you don't have the euro-US dollar, you can chart UUP or the US dollar index. Same thing, big bearish wedge in reverse. Here's a downtrend line off the lows in early 2018. So there's a almost a year and a half trend line right there. That's the level you want to see get taken out. Maybe a little minor uptrend line there, but I don't want to force that. Let's take that away. So that's what you want to watch for in here. Let's tighten that trend line up a little bit. That's how it should look, UUP. And remember, of course, this being that if the dollar reverses trend, a falling dollar is bullish for gold, simply because it takes more dollars to buy an ounce of gold. So that's why you have that inverse relationship between the US dollar and the price of gold. And then finally, just to loop back to the markets, I said in the trading room today that if NQ does take out that 7,800 level, which it now has, it's trading as I talk at 78.19.20. It just ticked. That I think you'll get more bang for your buck on a long the small caps, because they're poised to break out. There's that level 159.40. We still have the negative divergence, but even as a short term, just a day trade to hedge up today, since the NQ is up and it's taken that level out, I've taken some RTY, which are the small caps, the ETF as a hedge against my NQ shorts. They'll probably, if NQ reverses and dumps in the close today, RTY will, but I'm just going to trail up stops as we go. And this, I think, has more bang for your buck if the recent breakdown in tech and QQQ proves to be a failed breakdown, whipsaw signal. Lots of reactions here, as I mentioned. So, and IWM's pushing on that right now. So we're up about 1.12%. And where does that go? Again, I'm cautious because of the divergences and everything else. And I do think that if it pops, you will eventually get a reversal, a failed breakout. But just like I'm saying, very near term. You can, if you're quick and nimble, and you just trail stops up. Don't let it get away from you. If it reverses, there might be a quick trade to be made here. Even today, it may just be a day trade if we do break out, but we haven't done that yet. We're right about. You can see we're right about that line where we've stopped before all these other recent highs in IWM. So there's one to watch. And if you're longer term bullish, and you think the market's going to, new highs and beyond in 2019, the broad market, well, almost certainly the small caps will play a game of catch up. They've lagged behind the large caps. You can see they're well off their highs right now still. And you'd probably see a game of catch up if the markets turn back to a full-blown risk-on scenario. But right now, like I said, it's mixed signals. Treasuries are up, gold is up. Those are both risk-off assets, so we're seeing some cross currents today. Although I say this all the time, one day doesn't make a trend, and we don't have clear buy signals on gold. We have gold at support, we have divergences, all those other things, silver divergences there, but we could soon take out those trend lines on silver, trigger a buy signal. And again, until the US dollar breaks out and the dollar breaks down, I'm probably going to just share these as unofficial trade ideas until we get those, confirmation with the dollar breaking down. I think that's it. I might as well cover USO too, because that's an official trade. Yesterday I highlighted what were at the time potential divergences in the futures, and then this morning an update showing you we would have if we opened up, we would get confirmed divergence. So that's what we have here, and you got to respect 60-minute. These are my go-to swing trading time frames. When you get these 60-minute divergent highs and lows, you can see them there. Divergent high, correction. The primary trend has been up. Now, here's the thing, it's just like the stock market. We have cross currents. On the more significant daily time frame, we recently had a breakdown and back test. That's a pretty powerful sell signal. So these 60-minute divergences, I would expect them at least play out, and so far just for a minor bounce. This will be telling, just like the stock market. We'll see how far this bounce goes, and the shallower the bounce, because you would expect normally, anytime we've had 60-minute bullish divergence like this for months now, it led to the next major leg up. We're talking, 5-10% plus rally. So if we just come in here and there's a gap to be backfilled, there's really the top of the gap is right about here on the crosshairs, but there's some resistance here around 1310. There's all your targets. I listed some resistance levels as well. We took out the former T1 target level now, but I listed these yellow lines. What I'm trying to get at is if we reverse and then take out the lows, which I still favor, and again, I want to be very clear on that. I am not modifying this trade either. My plan on this, I do expect this rally. I don't think these divergences will play out for that much, again, because I'm putting a heavier weighting on the fact we've had those major sell signals and breakdowns on the daily time frame, plus a very big divergent high here coming off right there at that high, even on this 60-minute chart. So where we reverse, I don't know. It'll probably, as long as the equity markets are rallying, crude can continue to rally. But this is what you want to watch for. All of a sudden, out of the blue, if you start to see everything reverse, the stock market or crude, well, let's right now just treat crude on its own because it has disconnected somewhat. It's certainly corrected a lot more than the market recently. So these are any or all of these levels we could reverse at. And I'll leave the stop here for now because we've only hit the first target. If we do reverse, which I still suspect we will, might not be until next week, and we come on down, we hit T2, my plan is then to lower stops to entry. Here's our entry point right here at the arrow. So at the time T2 is hit, if and when it's hit, I'll lower stops to break even, and then we'll let that trade run. And I may even, depending on what happens, we'll have to see how next week shapes up, may even add additional price targets on USO, again, assuming that the correction isn't over and we're not going to go up and take out that stop from here. All right, let's wrap it up there. 20 minutes on the mark. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.